I'm hanging on for dear life to this Bitcoin trade. It narrowly missed my stop loss, not once, but twice actually here recently. And with NFP right around the corner, this trade very well could turn into a losing one for me. But I want to talk about NFP as we count down the minutes to this key pivotal moment for the jobs market in the United States. Let's jump into it. So tomorrow we'll get December's numbers in terms of jobs data. And there's several things that I want to discuss with this because it is a very important NFP report. We've got a lot of tension in the markets right now, if you haven't already noticed, as the dollar index continues to push higher. And the problem with this rising dollar is that it's on the back of a basically rising 10-year treasury yield. And what that suggests is that essentially the US economy is very strong, and with that strength comes the concern of continued or perhaps even rising inflation. You can see that when we take a look at CPI year over year, we had fallen for a while, gone sideways, started falling again, but now we're facing a question mark. Is CPI bottoming out? Is inflation set to continue to rise in 2025 amidst all of the new fiscal policies that come with Donald Trump, with strength in the labor market, which is why NFP is so important. Market participants are trying to figure out if the Fed can cut rates at all this year, if inflation keeps going higher and we don't head back towards that 2% target, which by the way, we never made it to. If we bottom out before 2%, get ready for some scariness in markets. By the way, for those of you who have the EdgeFinder, check this out. We just added core PCE to the EdgeFinder's report, which is another really key inflation reading that the Fed actually prefers to use over CPI. And what we can see with core PCE numbers is that they rose dramatically, went sideways, started coming down here, and have really flatlined in the last several months. So the thing is, the Fed wants to see specifically this core PCE number start to trend down in order for them to have the kind of excuse or the reasoning or whatever you want to call it, the A-OK to begin cutting rates once more. We saw a couple rate cuts in 2024, but the issue is now, is that all we're going to get before we have to potentially stop rate cuts altogether? And maybe even bigger question is, are we going to talk about rate hikes this year? Again, if inflation doesn't make any further progress from here, Jerome Powell has made it very clear that a 2.5 to 3% inflation range is not good enough. We need that 2% target to come back into play. And if it's not coming down for very much, if we continue to see this thing not come down in inflation, there's possibilities that the Fed will take the stance that we're not restrictive enough, that we need to raise borrowing costs, raise interest rates to get the economy to chill out a little bit so that inflation can come down. And this recent renewed fight with inflation has been the main catalyst, in my opinion, for why the dollar index continues to push higher and higher. We're trading at 109.2, and I've got to say, we've been pretty bullish on the channel with the dollar here recently, and that's been a really good call out, which I didn't do completely by myself. On the EdgeFinder, what we can see here when we zoom in to these dollar crosses is look at all of the dollar favoritism that the EdgeFinder has been showcasing for the last few weeks. If we take a look at this, the Kiwi dollar, the pound dollar, the Australian dollar, the euro dollar are getting bearish readings, basically shorting the other idea, basically signaling bearishness for these other currencies and bullishness for the dollar. On the flip side, dollar Swiss, which is a trade I'm currently long on, and dollar CAD are both getting bullish readings. Now, why are we getting such a stark contrast? Why are we getting such a strong bullish reading out of the EdgeFinder on the dollar here recently? Well, let's look at it. First of all, an easy one is trend. Trend for a lot of these currency pairs has been to the downside. And check out this. The retail positioning indicator is also showing a bearish bias on several of these currency pairs. Why is that? Well, what the EdgeFinder is detecting is that retail traders are pig-piled into the long side of these downtrending currency pairs, and retail is essentially trying to call the top on the dollar, and it's been a painful trade for them for the last several months. And if you've been riding the EdgeFinder's kind of bullish ideas for the most part, then it's been a really good period here. The other thing is a lot of economic data has been real strong for the dollar and leading to some very clear trends and setups based on what the EdgeFinder is pointing out. Again, US GDP has been rock solid. PMI numbers have been really on fire for the US. Retail sales have been upbeat. What we're seeing here overall is US economic outperformance. And again, if you're a purely technical trader, you might not have picked up on this. That's why the EdgeFinder helps, right? The EdgeFinder's purpose is to look at this data and give us an idea of how that data is falling. Again, it's watching all the data automatically and generating scores for your favorite currency pairs, indices, commodities, etc. By the way, with NFP right around the corner, there is no better time to pick up a copy of the EdgeFinder. I know this is a sales pitch and I'll never shy away from that. It is a great tool that I think you should pick up if you're trying to improve your fundamental analysis, your technical reads, and your sentiment reads in the markets. We've got a ton of tools available to you within one singular platform, and we work around the year to continuously improve this software. If you don't have a copy of the EdgeFinder already, down below in the description, you can find some information about how you can get a 30-day trial of the EdgeFinder. And if you'd like to apply for that, just click the link in the description. I'll also pin it in the pinned comment section below so that you can get access to our 30-day trial of the software. Just apply down below and we'll reach out to you with some more information. So turning to the technicals, again, the US dollar looks really strong. Even if you just put a simple list of moving averages, everything kind of points towards more dollar strength at this time. Now, of course, something could come along, and the question will be, is that going to be NFP? What happens if we get weak jobs data? And more importantly, on a price action perspective, is jobs data coming out cool enough to break the dollar's uptrend? Well, let's take a look at NFP. So jobs data recently has been relatively upbeat, except for this kind of big swing and a miss that we got with the November reported numbers for October. The reason for that was largely considered because of the hurricane, although predictions were way off, right? You can see this red dot is the forecast for numbers, and the blue bar is what actually came out. So we had a huge miss in jobs data in that November report. The question is, going forward, what's next? And if we get a hot jobs print, that would signal to me more upside is path of least resistance for the dollar. Yields likely move higher. Gold probably takes a break and sells off again. Stocks would probably come under pressure, and everything reverses if we get a cool jobs print. Now, I want to go out and just say, I don't know the future with this economic data. Nobody knows for sure what could happen. But this week, we've had some kind of decently strong readings so far. Job openings came out better than expected. Unemployment claims are falling, meaning, of course, that less people are applying for unemployment, which is a strong indicator in the labor market. But ADP did come in a little bit light. So we'll have to see what NFP reports this week. And again, another key thing I want to differentiate here with this report is I keep talking about inflation and how important it is to this market. Don't forget, wage growth is a measurement of inflation, right? If wages are rapidly accelerating or falling, it is a measurement of inflation or disinflation. Largely what we actually want to see is inflation cooling off, right? So we don't want to see a major increase in wage increases. That actually can contribute to more and more inflation. So that's a key part of the report that I'll be looking out for. I mentioned my Bitcoin trade, which is absolutely all over the place. This thing is so volatile. We had a major push higher, which was great, but then we fizzled out, fell apart, and even tested these lows once more. By the time you watch this video, this thing could be anywhere, right? It is so volatile right now. It could be in the green. We could be completely stopped out of the trade. But I do want to just clarify that I do have a stop loss on this idea. I think Bitcoin has upside, but I never know for sure. And what would make me believe that Bitcoin has upside? Well, again, what I'm kind of leaning towards is, yes, the dollar is strong. Yes, this is posing an issue for kind of everything here, but we have some positive catalysts coming down the pipeline. Specifically, Trump taking office could actually be a continued bull catalyst for Bitcoin like we saw post-election. I mean, here is where you can see Donald Trump got the winning vote here. You can see it absolutely led to a parabolic jump in the price of Bitcoin and many other cryptocurrencies, but Bitcoin has been really on the back foot here recently. But with that nearing election kind of, or that inauguration, I think that we could see Bitcoin have a little bit of a push higher. Also, I like the way price action has been holding this area really well. And if it breaks, like I said, I stop out of the trade and I say, nope, done with that one. But if it can hold this area, I think there's some really decent risk to reward, and that we could actually go back and retest at the very least those previous all-time highs. I actually could go out on a whim here and say that I don't think that 108 is the high for Bitcoin. I do think that this year we do see 120 plus on Bitcoin. And if I'm right about that, I'll make some good money. And if I'm wrong, I'm going to keep as many chips as I can, if you will, on the table. Basically, stop out of this because, again, the momentum here is crazy to the upside. We've stalled out. What I do not want to see on Bitcoin is a failure at key support levels. I just want to see this stalling out turn into a renewed push. That's kind of my base case. I think that that's most likely. Most of the economic reads that I have been looking at on the EdgeFinder have pointed towards bullishness. And so I like the story for Bitcoin until something changes. Bitcoin continues to also be a bullish reading on the EdgeFinder, and most of the trades that I take are definitely something that I'm looking for bias from the EdgeFinder first and foremost, right? So I am also long the NASDAQ. I've got some risk on positions that could sour really bad on NFP day. Again, if jobs data is too hot and it scares the market about inflation, we could see markets go lower. And if that happens, I'll stop out of positions like I'm supposed to within my trading strategy. But we could be getting some good risk reward. So again, what you're hearing here is, Nick, you don't know what NFP is going to do. And the answer is nobody truly does. But where we position ourselves and how we manage risk in case we're wrong is all that matters. We can make educated guesses all day long, but what really matters to traders is when you're wrong, how do you manage it? And when you're right, can you hold on to the trade for large outsized winners? Speaking of the NASDAQ, you can kind of see here we've stalled out, and I wanted to just showcase a little bit of technical analysis that we did on today's live stream with Miko and Marco. They both broke down the indices for me, and it was actually a really cool session. We did a little bit of everything, so if you'd like to see the full episode, you can go back to our live stream that we did today on the A1 Trading Show, and you can find the session that we did within that video. We'll play that clip now.
Yeah, so indices are looking a little bit interesting. They've stuck between a rock and a hard place. We do have some nice support just underneath S&P around here on the daily chart. And again, kind of similar to Bitcoin, if this can hold, we still very much could trend to the upside. There has been no kind of real indication of us turning around just yet. I mean, that was a big bearish candle there, so I'm not the biggest fan of that. But my main focus is market structure. We're still putting in higher highs and higher lows. And for the most part, we're still doing that. So if we can remain above that, which is 58, 51. I think this is still a nice place to pick up some longs, especially on an intraday level. So let's say we're to have another push to the downside tomorrow, bounce again. I think that's a nice place for a buy. I would watch out for these lower highs though, because they are something to keep an eye out on. If the market keeps printing them, there's a chance we do break through. And I think NAS is also doing something similar as well. Again, really nice level of support, which still looks good to buy from. But we are putting in these lower highs, so I would watch out for that. Still a nice place for a buy, but there is that possibility we put another lower high in and then potentially sell off. If we can kind of break through this counter trend line there, same for S&P as well, that could be the catalyst that takes us back to highs again. So yeah, I would watch out for that, but I think it's still relatively bullish for both of them. Really nice levels of support, kind of doing the same thing really. So yeah, keep an eye on those levels, and if we do see some good entries there, I do think we are due a bounce.
Yep, I love that. I think I've got the exact same markups on my chart, so great to see we're kind of on the same page with that. S&P especially having that very clear level of support, but as you mentioned, some lower highs on the lower time frames, which could give way to the dominant uptrend, but we don't know for sure. So one thing to be careful with here is, I agree with you. I like the risk to reward best at these areas. But of course, as always, when we have a technical idea or a fundamental idea or any idea about the markets, we don't know what's going to happen. But if you're going to make an educated guess, what technicals do that are very special about technical analysis is it helps you to define your risk. It helps you to find better risk to reward type styles, right? You want to take trades when there's actually something that gives you kind of the peak possible reward relative to the risk that you inevitably have to take in case you're wrong. So love those levels that you marked up on the indices, and they're pretty clear to me as well. So we'll see if they can hold. I like the probabilities of them holding as well. Marco, same thing to you. Has this lost the momentum, or are we just consolidating here before a bigger up move?
I do believe that we are just kind of testing this sort of a trend line. This is the way the S&P likes to move, at least according to my backtesting. So Forex kind of goes or trends, I would say, in a cleaner fashion, while the S&P likes to trend in these larger channels. So I do believe this is no cause for a concern. Yes, we do have one big bearish candle right here, but it could not continue, and I'm still on the bullish track for the S&P. So I do believe a bounce right here could be pretty likely. And of course, as you mentioned, we have election coming up, or not election coming up, but like Trump is gonna finally start becoming the president. So that might be playing a part as well. People may be waiting on the sidelines. NASDAQ is gonna be following the S&P, of course. And I have the exact same story. Sort of a trend line right here, and overall moving in a channel-like formation. So I'm bullish. I don't have a cause for concern. This is only just one large bearish candle with no follow-through, and we have seen that happen quite some time in the past, while Nasdaq and S&P just continued right after it. So I'm pretty bullish on the indices.
If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.